companies, especially it seems like in the food industry, always seem to be in a constant state of evolving in terms of what brands they want to have in their portfolio. And that can lead to some interesting decisions thinking about mergers and acquisitions. A recent move by chocolate maker Ferrero to buy WK Kellogg brought forward some similarities to what we may have seen a few years ago in and around Kraft Heinz. That was picked up by our guest, Emilie Feldman, who's a management professor here at the Wharton School, and she joins us to share her thoughts. Hi, Emilie. Great to talk to you again. How are you?
Hey, Dan. Great to be back. Good to talk to you too.
So you talk about the similarities between what we're seeing now with Ferrero and what we may have seen a decade or so ago with Kraft Heinz. Explain what you saw there.
Yeah, definitely. So, kind of rewinding here for a minute, what we saw with Kraft actually was a really interesting scenario where this integrated company separated its North American grocery business from its faster growing and more global snacks business, biscuits business, right? And so they had kind of these two separate pieces. The biscuit business goes on today as a new company called Mondelez, and Kraft, of course, was merged with Heinz in 2015. So notice the key themes already that are coming out: separation of fast and slow growing businesses, and then subsequent merger acquisition of one of the parts. So fast forward here to 2025, and we actually have two really interesting things that have been happening in recent years, right? So one is that a couple of years ago, Kellogg, company that was, of course, well known for its classic cereals, broke itself apart, right? Just like Kraft did back in the day, separating its cereals business from its snacks business, right? And so again, separating high and low growth assets, really trying to tailor to consumer preferences in a fast moving and taste changing environment. So interestingly, both of the parts of that separated company were snapped up, right? So a couple of years ago in 2023, Mars bought Kellanova, which was Kellogg's snacks business. And just last week, as you said, Ferrero announced that it was buying the cereals business, WK Kellogg. So I think it's really interesting to kind of note that parallel of kind of separation followed by subsequent acquisition, right, that we see in both of these scenarios, especially given different dynamics that were occurring among the two separated pieces.
So
The final piece, oh, sorry.
Go ahead.
The final piece, just to add to it, is that there's a really interesting coda to this whole story that I've been kind of telling you here, which is that, of course, last week, Kraft Heinz, this merged entity that we were just talking about a moment ago, announced that it was going to be potentially separating the North American grocery business from kind of this integrated company. So we'll see what happens next, but super interesting to kind of see that same kind of replication of separation followed by ...
So is it something about, and obviously I think this is unique because various sectors will be in M&A in various levels. But within this kind of food industry, is there something about the grocery business that is drawing this attention right now? Or is this just a dynamic of what this industry goes through on a fairly regular basis?
Yeah, I think it's a dynamic of what goes on in this industry, right? Part of it, as I mentioned a little bit before, is kind of changes in consumer taste, right? So, of course, everyone knows that people trying to eat healthier now, higher protein, less snacks, less sugar, less carbs, right? And so I think there are some fundamental, shifts perhaps in terms of kind of what consumers are doing. Add to that inflationary pressures, add to that the rise of GLP-1s and weight loss drugs. So you can see there's like a whole bunch of kind of exogenous factors maybe that are reshaping the landscape a little bit and perhaps driving some of these transactions. But I think my broader view of this is that this is actually kind of a consistent pattern that we observe over and over again across many different industries, right? So think about pharmaceuticals, right? Within the past 5-7 years or so, we've basically seen all of the pharmaceuticals companies unwind and separate all of their kind of consumer health brands that you just buy off the shelf, for example, at a pharmacy. My prediction is that within the next 10, 15 years, they'll all reacquire them, right? And we've seen that actually kind of that cyclicality of winding and unwinding go on within that sector. And I'm sure I could think of others, right? But we definitely see that pattern of kind of acquisition, divestiture, acquisition, divestiture.
So it looks like that with some of these moves, part of this is because of the U.S. market. But I'm wondering if because Mondelez is obviously a company, and these companies have global reach. If there is an element of global to this, it is why they are looking to make some of these moves.
Yeah, I would agree with that. And I think that, the biggest issue, especially in kind of the CPG space, right, is that scale really, really matters, right? And so, especially for a company like Ferrero, which is, of course, a European company, right, think about what it's done, actually, even putting aside everything that we've been talking about over the past several years, right? They bought some US ice cream brands. They bought Nestle's US confectionery business consisting of brands like Butterfinger, right, classic canonical American chocolate brands. Now they're buying Kellogg cereal, right? So I think that the way that I see this, if I can kind of use a maybe appropriate pun, is that they're kind of getting a seat at the table in the American market, right? Given kind of European presence, right? But I think that idea of kind of global scale and reach, but then depth within each of these geographic markets really matters
But
in this case in particular.
But should we be surprised that a company like Kraft Heinz has their grocery business for about a decade and seemingly they're willing to move on from it after just 10 years?
Yeah, I think it's a really interesting story. So there's a couple of pathologies that I think are worth highlighting here, right? So one is that this was a merger that was really, really challenged from the beginning in terms of synergy realization and in terms of post-merger integration. So they had a terrible time. And they really faced a great deal of difficulty in terms of managing that aspect of the transaction. And so what we know actually from research on M&A and divestitures is that when companies divest failed acquisitions, right, acquisitions that they had previously done that didn't work out, on average, it actually takes them 7 years, right, to do these divestitures, right? And if you look at kind of the laundry list of failed mergers of equals, right, it's pretty much all of them unwound after 10 years, right? So that actually wasn't terribly surprising to me. I think the thing that is more interesting about this, though, is the idea that when the deal was consummated, right, when the acquisition was consummated, the whole thing was scale, 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 drive costs down, create that broader footprint in the grocery store. And now, as you're sort of saying, there's this reverse logic of focus, 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 right? We really need these separated businesses to be able to focus on and pay attention to their own individual growth rates, trajectories, consumer tastes, right? All of these kinds of things, right? So that's the reversal that I think is very interesting, actually.
You mentioned a lot of different factors that were in play in recent years. How much with some of these decisions also is the pandemic still factoring in to this because of how these companies were so impacted to the downside, how we changed our lives so much in terms of their production, in terms of consumers buying products, how much money they had. There's a lot of different areas of factors that probably are still playing a role because of the pandemic.
Absolutely. I would agree with that completely. I mean, I think chief among these, right, is that everyone just started snacking more, right? We were all trapped in our houses, right? So
Yep.
snacks were the name of the game, right? And
Yeah.
so when you look at a company like Kellogg and realize that, you kind of have this golden goose with Pringles, right, as kind of a key asset within the snacking business and all these other beloved brands of snacks that people are eating more and more of, or were eating more and more of as a result of the pandemic, you can sort of see, I mean, exactly what I'm saying, kind of this divergence in the trajectories of the cereal business from the snack business, right? And probably similar for Kraft Heinz as well, I would venture, right? So I think that that's probably at play here also.
So is it safe to say that the theme from these moves lately is just wait, there's probably another one coming down the road in a few years?
I guarantee you, right? If you ask me my prediction, right, I think that if you look at continuing with Kraft, right, if you look at Mondelez, right, we have this delicious asset, right, full of these very, very great and storied biscuits and snacks business, right, that people love, right? So it wouldn't surprise me at all if Mondelez either acquired or was acquired by somebody else within the next couple of years. People have been talking about PepsiCo as well for years as well, in terms of separating kind of the snacks business that's part of that company, Frito-Lay and all of the snacks, from kind of the core beverages business, right? So, and even if you look at this from an external perspective, right, I think that there were some activist investors actually that were even Nelson Peltz, if I'm not mistaken, kind of advocating for PepsiCo to break apart and to merge the snacks business with Mondelez, in which he was also invested, right? So I think that there's definitely investors and outside parties who recognize kind of the value of these kinds of combinations and are likely to keep pushing for them as well.
Emilie, great to talk to you and get your insight. Thanks very much.
Thanks, Tim.
Emilie Feldman, management professor here at the Wharton School.